Hello and welcome. This is Business Incorporated, and thank you for joining us. I'm Chimeze Obi Iwagu. On the program today, the World Bank expects sub-Saharan economy to rebound moderately to 2.7% this year after a 3.7% contraction in 2020. South African motorists to pay more for fuel prices, both petrol and diesel increased today. Plus, in our feature story, COVID-19 lockdown prompts some Nigerians to turn to farming for an additional source of income. We tee off with the intraday market numbers. Amongst the markets we track here in Africa, only the NSE index was in the red territory. The index was down by almost 2%. In South Africa, the JSE index was sunny side by 1.27%. The EGX 30 in Egypt also traded in the positive, up 1.21%. The Nairobi Stock Exchange closed a Tuesday positive at 0.30%. In the Gulf region, meanwhile, it was a sea of red. In the UAE, the Abu Dhabi index was down 0.29%, while the Dubai financial market traded 0.11% down. Elsewhere in the region, the Qatari index was down 0.37%, and the Saudi Arabian market traded marginally low at 0.04%. And European stocks were mostly higher in the morning as the coronavirus pandemic and U.S. political developments remain a key focus for investors. But let's hear from Chelsea. Hello, Chelsea. Good afternoon. Well, it's been a volatile few days for markets as lockdowns are being extended across Europe. How are markets trading in Frankfurt today?
Well, Shimi, it's actually a pretty good day for stocks here in Frankfurt. The DAX, as you can see behind me, is up about 1% right now. And that's after the federal government here in Germany yesterday announced very tough new restrictions on public life, as well as an extension of the shutdowns and the business lockdowns that we've had in place over the past couple of weeks. Those are all going to be extended through January now. But that hasn't really shaken traders. And right now, a lot of the focus is on what's happening in the United States in terms of the runoff election in Georgia that will decide the fate of the Senate. There has been a call in the race that one of the Senate seats is going to a Democrat. If the other Democratic candidate wins the race, then the Senate will go to the Democrats, which would give Democrats both the White House, it would give them the White House, the House, and also the Senate. So it would be, as they're calling it, a blue sweep that would allow the Democratic Party to implement a lot of new policy changes. And particularly, Joe Biden, the president-elect, has already said he would introduce a $2,000 stimulus check as soon as he gets into place if they are able to grab the Senate in this runoff race. So it's a big election that holds a lot of cards for the Democrats, whether they will be able to come through with more stimulus efforts, and for the rest of the world, more stimulus would be a benefit as well, which is what we're seeing in stock trading today.
And still on the COVID-19 lockdown, the EU's Medicines Agency is meeting today to decide on approval of the Moderna coronavirus vaccine. Now, could this help Europe catch up to other countries in its vaccine rollout?
It would certainly help. The EU only has approved one vaccine so far. It's the Pfizer-BioNTech vaccine, and that has been being distributed over the past couple of weeks. But as you mentioned, it has been going quite slowly. There is only a limited supply of that vaccine, which has been the front runner in the race. So the EU is competing with every other country in the world for access to that vaccine. And so we have seen a very limited supply and only a few 100,000 people getting vaccinated throughout Europe in comparison to millions in the US and the UK. The approval of a second vaccine would obviously increase the supply available to Europe. The EU has already ordered about 160 million doses from Moderna, and they've said that they could start getting deliveries next week. That likely wouldn't solve the entire problem that the EU is facing. There have been other distribution challenges here in the EU that's making the vaccine rollout go a little bit slower, but it would certainly help improve the amount of supply available for vaccination.
Now, in another development, the German government is also expected to vote today on whether to introduce a gender quota for female representation on German corporate boards. What will this new quota do?
So what the government approved today, what the federal cabinet approved today, is a new law that would require companies of a certain size to have at least one female board member. So this would apply to companies that are publicly traded and also have already 3 board members. So it wouldn't hit the smallest of the small companies, but the ministry says that it would apply to about 70 companies, 30 of which have no female board members right now. So this would improve representation on German corporate boards. However, it's really a small step towards equality, a lot of critics say, because many German boards are all men right now. And even if you have, one female board member, if you're a board of 10, 11, 12, which many large companies are, one female board member doesn't go a long way in terms of improving the diversity situation. And Germany also has had a voluntary quota in place since 2015, and it hasn't done much to really alter the landscape for equality on corporate boards. So there clearly has been some resistance and some slow pedaling to really alter the landscape for equality there. But at the same time, it is an important step. It does show that Germany wants to have a more equal corporate landscape. So I'd say it's more of a symbolic gesture than a real game changer in terms of diversity.
Well, I guess that's the global way of doing things now, trying to bridge the gender inequality. Thank you very much, Chelsea. And the final readings for the UK PMI surveys have come in. They are slightly weaker than the flash estimates, but paint broadly the same picture. Let's have Juliana talk to us about this. Hello, Juliana. Good afternoon. Well, let's start on the data front. The latest PMI suggests Britain's economy returned to growth at the end of the year ahead of the latest lockdowns in England and Scotland, which were announced on Monday. Now, what are the details of this data?
Yes, well, the details aren't great. We have had the PMI service sector data, and it does show the second monthly decline in services. There has been a slight uptick from November. November's reading was 47.6, but the one that's just come in is 49.4. And anything below 50 shows that the sector is contracting, and there's no surprises, really. December is supposed to be the final month of the golden quarter of the year for the service industry. But alas, most of the hospitality sector was completely shut down. Hotels that typically would be seeing millions of visitors coming to spend their Christmas in London just didn't get that footfall. So unfortunately, this is what we're seeing. Also, business sentiment at the moment is relatively low. It did start to pick up. A lot of people were saying that the recession that Britain saw, the historic recession, would be seeing a fast bounce back, and all of the indicators were there. But unfortunately, those restrictions and that lockdown in November really hampered on December's output. And now we're back into another full lockdown, so it's not looking great, particularly as when it comes to services. This is 80% of Britain's GDP, which is one of the main reasons why Britain is lagging behind in recovery when it comes to all of the other countries in the West and in the G7 in particular.
All right, let's look at the market numbers there. The FTSE index pushed some 56 points higher in the morning. Sterling has also benefited from the dollar's weakness and edged higher. Bring us up to speed with these numbers at intraday. What are the key drivers? How much are the markets reading the PMI?
Well, despite the bad news, the FTSE all shares doing pretty well at intraday. Triple-digit figures is what we're seeing. I think lots of this sentiment really is coming from Prime Minister Boris Johnson. He's just wrapping up a speech in the House of Commons. He recalled Parliament to try and push through these new legislation laws about the lockdown. And he has promised that he will be giving 2 million, not he himself, but the NHS will be given 2 million jabs of COVID vaccines a day by mid-February. And that's really one of the only ways Britain can escape from this national lockdown. The Square Mile in the City of London seemed to be taking this pledge seriously, which is one of the reasons why the FTSE is so high at intraday. So the all-share is up 1.13%. The FTSE 100 is up by 2.24%, and the FTSE 250 is up by 0.99%. In currencies, the British pound is up against the US dollar by 0.27%, down against the euro, though, by 0.06%, and up on the Japanese yen by 0.37%.
Now, are the oil stocks dancing to the tune of what is going on in the global oil market at the moment?
They are. Oil is doing really well. In fact, the oil majors, Royal Dutch Shell, BP, they are one of the biggest drivers on the FTSE at intraday. And of course, this is due to Saudi Arabia stamping their dominance on the oil scene. Yesterday, they pledged to cut in February and March their oil barrels by 1 million per day, even though they have allowed Russia to still continue producing. So everybody is focused on the OPEC and the OPEC Plus meeting, which is why we are seeing this rally in the oil market. Is it going to last? We're not sure about that, because we know these new lockdown restrictions aren't just affecting Europe. We are expecting to see more lockdown restrictions being placed in certain parts of Africa, Asia, certainly in the US, now that Joe Biden is going to be sworn in a couple of weeks' time. And with that, what we are going to see is less travel. And with less travel, there's less demand on oil.
Yeah, and we know how volatile that market can actually be. Thank you, Juliana. Enjoy the rest of the day. In the meantime, markets across Asia Pacific were mixed as investors turned attention to Chinese tech giants and regional energy stocks. Shares of Tencent and Alibaba in Hong Kong gained 2.23% and 3.14% each. South Korea's Kospi led the decline in the region's major markets as it dropped 0.75% to close at 2,968.21. In Japan, the Nikkei 225 also shed 0.38% to close at 27,055.94. On the gainers side, the Topix index finished its trading day 0.28% higher at 1,796.18. Hong Kong's Hang Seng index was 0.15% higher at 27,692.30. Stocks in mainland China was up, with the Shanghai Composite gaining 0.63% to 3,550.88, while the Shenzhen component gained 0.364% to close at 15,187.61. Meanwhile, shares in Australia slipped, with the S&P ASX 200 down 1.12% to 6,607.10. And in the U.S., stocks futures were lower in today's early trade as Wall Street maintains an eye on the two runoff elections in Georgia, likely to determine control of the Senate. Dow Jones Industrial Average futures were flat after rising 167 points on Tuesday, while S&P 500 futures and Nasdaq 100 futures were also trading in negative territory after advancing 0.7% and nearly 1%, respectively, at the close of Tuesday trading. Analysts on Wall Street fear that a Democrat-controlled Senate could lead to higher corporate taxes and tougher regulations on companies, which could weigh on the broader market. And on the global oil market, Brent prices rose this morning to the highest since February after Saudi Arabia agreed to make bigger cuts in output than expected during a meeting with allied producers, while industry data showed U.S. crude stockpiles fell last week. Brent crude rose as much as 0.6% to $53.94 a barrel, the highest since February 26, 2020. It was at $53.79 a barrel, nearly trade, and gained 4.9% on Tuesday. U.S. West Texas Intermediate futures gained 13 cents to $50.06 a barrel. The contract on Tuesday closed at 4.6% at $49.93, its highest since February 24, 2020. Now, Saudi Arabia, the world's biggest oil exporter, agreed on Tuesday to make additional voluntary oil output cuts of 1 million barrels per day in February and March after a meeting with the Organization of the Petroleum Exporting Countries and other major producers that form the group known as OPEC+. The reductions agreed by Saudi Arabia were included in a deal to persuade other producers in the OPEC+ group to hold output steady. And World Bank says growth in sub-Saharan Africa in 2021. That's next in a moment. The World Bank expects sub-Saharan economy to rebound moderately to 2.7% this year after a 3.7% contraction in 2020 due to the COVID-19 pandemic and associated lockdowns which disrupted economic activities on the continent. In its January 2021 Global Economic Prospects report, the World Bank says that Nigeria's economy will witness a resumed growth at 1.1% in 2021 from the 4.1% contraction in 2020, with activities expected to remain dampened by low oil prices, agreed OPEC quota, falling public investment due to weak government revenues, constrained private investment due to firm failures, and subdued foreign investor confidence. The multilateral lender adds that growth in South Africa will rebound to 3.3%. Meanwhile, it says that global economy would expand by 4% in the same period, assuming an initial COVID-19 vaccine rollout becomes widespread throughout the year. It stresses that a recovery, however, will likely be subdued unless policymakers move decisively to tame the pandemic and implement investment-enhancing reforms. And beginning from today, South African motorists will pay more for fuel price as both petrol and diesel will increase. Mineral Resources and Energy Minister announced this adjustment of fuel prices in a statement on Monday, citing the increases were based on current local and international factors. Let's see how this is playing out from our correspondent in South Africa, Brian Pugeni. Hello, Brian. Good to see you and Happy New Year to you.
Compliments of the New Year as well.
Thank you. So what is it like coming to work this morning? Has the fuel price increase taken effect?
Yes, the fuel price took effect from midnight today. So fuel prices, all grades went up between 40 and 55 cents. That's both for petrol and diesel, the different grades, which takes the fuel price to around 15 rand. It's a dampen to the new year. Most holiday makers are making their way back from their holidays, and the first thing you meet on the first week of work is a fuel increase. That's, I'm sure, the worst thing and the worst possible scenario for you to start off the new year with an increase in fuel. So there have been a few cars, and speaking to motorists, they're really not happy about the fuel increase, especially at the beginning of the year. Even though last year we saw a huge decrease in fuel, but there have been slight increases as the year went on, the year 2020. So kicking off 2021 with another increase, that's really bad for motorists and the economy itself.
Yeah, South Africa is already battling economic crisis coupled with rising COVID-19 cases. Just as you alluded there, you've had some kind of interactions with motorists, and I'm sure you must have also spoken to some business people. What are they saying? What soundbite are you getting? How angry are they?
Well, like you're saying, most people are not really happy with the situation which is happening in the country, especially with the surge in the new COVID variant, and the numbers have been increasing over the past week and a couple of weeks. So really there's uncertainty in the economy as well. But now people are really looking forward to the vaccine and the rollout and how government is going to tackle the rollout of the vaccine and the acquisition of the vaccine. So most people are really hoping that once the vaccine has been rolled out, there's a bit of hope once the vaccine is here. So people are really pushing the government to say, okay, let's just get the vaccines, let's roll them out, give them to the health workers, give them to the elderly, then give them to the general public. Then we can get back to our normal lives and maybe the economy will get back to what it was before the pandemic.
Now, are they happy the way the government of President Ramaphosa have been handling this whole issue? How optimistic are they going into 2021?
Well, there's mixed reactions. As you know, at the moment, today there's a National COVID Command Council meeting where the president is meeting with the ministers who are in charge of the coronavirus council. So people are not sure whether the president is going to take us back to a harder lockdown of which if the president does take us back to a harder lockdown, already people are skeptical about the economy and the future. But if the president comes and says, okay, we've got a plan for the economy to continue to run, but people must continue with social distancing, wearing the mask and taking care and following the COVID regulations, the economy is going to go back to what it was. So people are really, there's an uncertainty because now we're waiting for what the president is going to say, which is going to determine a lot of factors in the coming days and weeks. Because if he does take the country to a harder lockdown, obviously the economy is going to stall again. But if he says we're going to ease down the lockdown, which means the economy is going to kick off and January is going to be a smooth sailing and hopefully to be a better year than 2021.
Let's remain optimistic. Brian, thank you very much and keep tracking those developments there, and we'll keep coming to you for follow-up to update us.
Thank you.
Thank you. Enjoy the rest of the day. And back here in Nigeria, the COVID-19 lockdown prompted some Nigerians to turn to farming for an additional source of income. Local technology startup Big Drone, which saw an increase in the number of farmers reaching out to use its drones to spray pesticides and tapped into the needs of both experienced and novice farmers during the pandemic. Let's watch this.
Bidemi Olaojo sells seedlings and sets up home gardens in Nigeria's commercial capital. She thought her business would shrivel up when the COVID-19 pandemic struck, but then the orders started pouring in. Customers, she said, were scared of taking regular trips to the market that will likely expose them to the virus. Some, with more time on their hands during lockdowns, wanted to start producing their own herbs and vegetables for the family dinner table. After more than 1 year of being in the business, she barely had over 3 orders in a week. But surprisingly for her, during the lockdown, her deliveries moved up to 20 orders a day.
Like, I remember when COVID-19 started, I was so depressed. I was like, nobody's going to order for my seedlings again. In fact, I can remember there was a day I was crying. I was so sad about it. And lo and behold, when the lockdown started, the request for my seedlings, it's multiplied to about 100%. It was like really more and overwhelming.
Some Nigerians have ventured into farming on bigger plots rather than working on their home gardens. Veronica Kibu, a civil servant, 5 years away from retirement, said she and her husband decided to spend more time and money on expanding their groundnut farm in Nigeria's capital, Abuja.
Because of the coronavirus that has happened, my eyes has opened widely. So this thing has made me now, I've decided that I will not leave farming. I said by the grace of God, I will continue to farm until even when I retire.
To help reduce its dependency on oil, Africa's most populous country is pushing for more people to take up agriculture, which currently contributes about 40% to its gross economic output. Some technology firms were seeking to offer farming solutions at a time when restrictions on the movement of workers and social distancing is working against any desire to increase output. Nigerian startup Big Drone, founded by Confidence Odionye, was helping large-scale farmers spray pesticides on their farms using drones instead of backpacks.
The aim was simply to ensure that we increase efficiency in the agricultural sector and reduce the cost of operation and also improve harvest yield in the agricultural sector in Nigeria.
Be rest assured that here
a government report on the impact of the outbreak indicates that about 39.4 million people, about a third of Nigeria's workforce, may become unemployed by the end of this year.
And with that, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimeze Obi Iwago.